Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A hammer pattern yesterday as the tail of the market dipped down through the clear zone, all the way down to just short of the congestion zone between 103.69 to 103.38, which contains the lows of June and May, as well as December 2016 and January 2017. Prices then turned up and closed in the congestion area overhead between 104.92 and 104.70. This area contains both the February and March 2017 lows at the same 104.92 number. As I mentioned yesterday, we have a number of possibilities ahead of us. The immediate one is that the market is set for a possible weekly key reversal down this week. If we close tonight either below 104.97 or above 105.72, then we'd be on. Currently, we're looking at a weekly key reversal down. Further features that have become evident is, firstly, the possibility of either a double stroke triple bottom over the June action, and then secondly, is that we may have a possible late April to date descending triangle pattern. Now, more on these as they develop. Now, so far today, a little lower. The market is capped by the 104.92 to 104.70 congestion band, and slowly trying lower. Cable, aka sterling against the US dollar. A reactionary bullish harami yesterday after the previous session's second bearish black crow. There still continues to be a break lower from the recent May to date diamond pattern. This pattern is becoming more secure each day. These are now the following targets for this diamond continuation pattern. A primary target X1 in the 118.60 area and a secondary harder to get target X2 in the 115.30 area. Overhead, we have the resistance of the June 2020 low at 122.48, which had been a source of congestion in recent days, plus the nearby upper time, currently at 122.71 of the late April to late May bearish shift pitchfall, plus entwining it and the falling short moving average, currently at 122.43. Meanwhile, below we still have the May 2020 support at 120.73. Now further down, there is little support bar the middle time, currently at 119.48, until we start hitting targets. Finally, just like Eurodollar, the market has done enough to set up for a possible weekly key reversal this week. If we close tonight either over 122.63 or under 122.24, then we'd be on. Right now we are looking at a weekly key reversal down here. Now, so far today, a counter-reactionary move back down through the May 2020 low and into a free zone below with what looks like now like a bearish engulfing pattern. Euro sterling. An interesting indecisive spinning top yesterday for long tail below. This coming after the significant key reversal down and bearish engulfing pattern in the previous session. You see, not only does it seem that the market is not keen on testing the overhead resistance from the April 2020 low at 86.69, at least not yet, but the drop in the tail pierced a number of supports before turning back up. The price is pierced the short, late May to date upper trend line, currently 85.96, as well as the neckline, currently 85.74 of the December 2021 to May 22 reverse head and shoulders pattern, plus the important April to date uptrend, currently at 85.74. We nevertheless still have target X above in the 86.80 area. This is the primary target for the recent smaller lopsided diamond pattern, with a harder to get secondary target X1 in the 87.65 area. We also have for the recent extended diamond pattern a primary target X2 in the 87.15 area and a harder to get secondary target X3 in the 88 even area. For these two diamond patterns, both primary targets X in the 86.80 area and target X2 in the 87.15 area have already been achieved. There's also a bigger pattern, one I've spoken about now for months, is the very large falling wedge pattern, currently at 84.40 to 81.20. Now this pattern is still in operation, but has fallen into the shadows a little with the rising prominence of the diamond patterns. And though triggered, it still leaves us with some serious questions. You see, it has the most ambitious upside target of all. Target X4 for this pattern is in the 88.65 area, and that is a really big ask. More recently, we've seen action at the previously mentioned neckline, currently 85.74, of the December 21 to May 22 reverse head and shoulders pattern. This support is also the extension of the rising upper trend line of the original and extended diamond patterns. A primary target X5 for this reverse head and shoulders would be in the 87.75 area, and a secondary target X6 would be in the 88.60 area. Targets X4 and X6 are currently just off the top of my daily chart. Now, two final items. The first is to recognize a possible late March to date large ascending wedge pattern. Currently that's 85.74 to 87.63. This is an interesting pattern and one that I hope may soon play a more prominent role, but yesterday's action pierced the lower trend line of this pattern, so it may need some more consideration of the implications of such an action. Secondly, we have a possible imminent golden cross of the rising medium moving average, currently 84.40, up through the ever so slowly rising long moving average, and that's currently at 84.43. I know this is a lagging indicator, but it's important as a lagging indicator. Now, so far today, well, a somewhat extraordinary action of a lower open and a strong rising, what appears to be right now, a bullish opening long white Mariposa. That sets up the condition for this week to be a possible weekly key reversal up. So if we close tonight over 86.02, then we'd be on. US dollar against the Indian rupee. A new high yesterday, but only by a little, but with a bullish thrusting pattern that was based on the projected 50% Fibonacci line at 78.85. Once again, the range was topped and tailed by the 61.8% projected Fibonacci line at 79.07 and the 50% projected Fibonacci line at 78.85. Now, just beyond the 61.8% Fibonacci line is the upper time, currently at 79.24, of the January to April bullish shift pitchfork, while below is the lower time, currently at 78.35, of the Andrews pitchfork for the same move. Looking at the action since the start of May, I've been contemplating which pattern would be the best fit to describe these moves. The best that I can suggest is a bullish measured move pattern. It's not perfect, for example, it slopes too much and up to the right, but I think it's better descriptive than the rising wedge pattern. Hence a primary target would be in the 79.67 area, and a secondary harder to get target X1 would be in the 80.43 area. So far today, well, a further new all-time high with a small follow-on higher to the bullish thrusting pattern over the 61.8% Fibonacci line at 79.24, but then a pullback down again. And it's gone such that we're actually on the case now to make a possible daily key reversal down, which would be a very interesting pattern to have right at the top of the market and opens all sorts of possibilities on potential moves below. But it's still early yet, and we'll have to wait and see what the close is tonight. US dollar against the Brazilian real. A counter-to-counter bullish harami yesterday as the market continues to batter against the overhead resistance of the combination of the middle time, currently at 529.10, of the April to late June bullish Andrews pitchfork, then the flatlining long moving average, currently 524.61, and the 50% Fibonacci line of the March 20 to April 22 move at 527.37. In the process, prices once more moved up and closed over the interesting 50% Fibonacci line of the March 21 to April 22 move of 522.76 and the congestion at 520.27. Now this is trying the patience of those interested in the market reaching target X in the 528.45 area. This is the target of the start of the April bullish halfway hesitation. It is not a perfect one, but it is still there and it is still so very close. Looking below, we have a fairly free zone until the 38.2% Fibonacci line of the June 2019 to May 2020 move of 510.93. US dollar against the Mexican peso. Right, yesterday's action has many elements to it and none of them give a clear answer. To start with, it was a key reversal down, yet it was also an indecisive spinning top, a second larger one, in a row. Prices also significantly breached the overhead slowly declining medium moving average, currently at 2017.13, but did not close over it and made a third lower close. It's very hard to make sense of these contradictory patterns all within 1 day's work. Overall, the market is still stabilizing over the middle time, currently at 1997 even, of the broken November 21 to March 22 bearish shift pitchfork, as well as the slowly rising short medium moving average, currently 20.0435. Now looking higher, beyond the medium moving average, we have the flatlining long moving average, currently at 20.4153, just sort of hanging there. So far today, a seeming reactionary move back up over the medium moving average, but not as yet managing to reach beyond yesterday's high. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.